By continuing to access this site, its content, or establishing any contact with Elliott Wave Live, you acknowledge having read and understand all disclaimers and risk disclosures.
Hi, Mike Sinibaldi here with another trading video. Recently, there has been a lot of interest and positive news flow on natural gas futures and ticker symbol UNG. I thought I'd make a quick trading video on how waivers can use Elliott Wave to quickly identify trading and investment opportunities. Take a look at this weekly chart of natural gas. Would you buy or sell this market? The answer can vary depending on what type of trader you are. Let's assume that you are bullish, looking to establish a position. The question to answer before taking a position is to ask whether it is really time to be bullish natural gas. But how do you answer that question if you're a novice or intermediate, having difficulty following each up and down movement, trying desperately to count waves? Well, I recommend you try these pre-trade tips. First, from the chart, do you see a wave pattern that you recognize? If you don't see a clean wave pattern within 5 to 10 seconds, you probably should not consider the market for a trade setup. Number 2, try connecting adjacent waves, forming larger patterns. Number 3, form a thesis. Is the large pattern a correction or an impulsive pattern? Number 4, label the chart. Number 5, formulate a trade plan based upon your analysis. Now let's put our trade tips to good use. For the purpose of this training exercise, let's begin our analysis at the September 2009 low. Step 1. In the chart, do you see a wave pattern that you recognize, or series of wave patterns that you recognize? I'll give you a few moments to collect your thoughts. In the chart, I see the following 3-wave and 5-wave patterns. From the peak, 5-wave down and done. And as we begin our analysis, we see 3 waves up, followed by a 5-wave decline, another 3 waves up, followed by another 5-wave decline. Step number 2, connect adjacent waves. The purpose of connecting adjacent waves is to see which way the market may be moving and then form a thesis in step number 3. However, let's go through each step before we form our thesis. 5 always follows 3. If we have a 5-wave decline here, another 3, then we should expect a 5-wave decline. We have this wave structure which would appear to be incomplete. Secondly, we could have a 3-3-5 wave pattern in which we have 3 up that should be followed by 3 waves down, which we now have, and then a 5-wave advance that would at least take out the previous high. Or we can have a triangle 3-3-3-3-3 where the first 2 waves would be complete. Step number 3, form a thesis based upon these 3 sets of criteria. Under the first set, 5 always follows 3 scenario. Here we had our 3-wave advance, so we're looking for 5. We have 1, 2, 3, which is incomplete, so we're looking for a 4th wave advance, which is corrective, as I've indicated here, and then we should be looking at another decline. The second criteria calls for a 3-3-5 correction, whereas we have our 3, and you'll notice we have 3, as I explained earlier, Even though this is a 5-3-5 structure, it's still considered corrective in nature, but I've now made the designation that this is a completed three-wave pattern. And 5 always follows 3, so therefore we should be looking for a 5-wave advance that would exceed the previous high. And finally, in scenario number 3, we'd be looking for a triangle. As we know, we already have 2 3-wave patterns complete. So under this scenario, we're looking for further advance followed by a down-up sequence that'll eventually fail to new lows. Now that I've explained the 3 scenarios, it's time to form our thesis. In 2 of the scenarios, 5 always follows 3 and the triangle interpretation, the end result after each pattern completes is down, so expect new lows. In the 3-3-5 pattern, we expect an impulsive move from here to take out these highs. With the odds in my favor to the downside, my thesis will be that the market will trade sideways to down near term. Let's move to step number 4. Step number 4, add wave labels. Now what I'm going to describe to you is what I feel is my preferred wave count. And frankly, this only comes with experience. Not that I'll eventually be proven right or wrong. But I've eliminated the triangle interpretation. I just don't think it's the best fit for what I'm seeing. From 6108, you can clearly see that I'm labeling the 5 always follows 3 scenario, in where we have a 5-wave diagonal pattern followed by a 3-wave correction for wave 2 and a clear 5-wave decline into wave 3, and we have wave 4 unfolding. Now before I go any further, the purpose of this training video isn't to have a discussion on the degree of wave labels or the minute subdivisions of this wave 4 right here. I've only listed 2 possible scenarios, but the resolution of the pattern still is down. So whether it begins now or we push slightly higher or trend sideways is irrelevant. I'm bearish short term this market in reality after I've done my analysis. At the beginning of this training video, I had mentioned that we would proceed with the assumption that you were bullish on this market. So after all of the steps 1 through 4, I've come to the conclusion that if I was bullish going into evaluating the chart, I now can no longer formulate a bullish trade plan, at least yet. So I'll have to wait for further downside development and look for a low and go through the process again to see if it will be truly a time to be bullish on natural gas. But let's just take this one step further. Let's suppose I'm totally wrong. Have I missed the move? That's what I'd like to evaluate at the present time. Earlier in the video, I described one of the scenarios under step number 3 where we have a 3-wave advance and a 3-wave decline that would eventually lead to taking out these highs. That pattern is called an expanded flat. So under that scenario, we would expect a rally from the termination of circle wave B to be in 5 waves to complete wave C of a much larger corrective move. In which case, I would wait for wave 1 to complete, then buy a 3-wave decline in wave 2, and participate in most of the advance in waves 3, the institutional wave. After a small pullback for wave 4, we should see another rally in wave 5 to complete wave C circle. So as you can see, even if I'm wrong about the short term and intermediate term direction of the market, which I'm anticipating to be down, I can still participate if I'm just patient and watch the market and let it tell me what it really plans to do. I hope you found this video helpful, and best of trading.